Hello everybody, Jackson here with the Wealth Squad. Today we'll be talking about stocks that are an obvious buy right now, starting with Microsoft. As you can see, Microsoft is trading for $258, same price it was trading for back in June of 2021. You can see that there. So you're buying basically a year of no gains, and that's good just because if you bought a year ago, you would be in the negative, you'd be break even. So you're saving that opportunity for the entire year, and now you're buying at the exact same price. So that's best that you're doing it now rather than last year. Even though you were collecting that dividends, you could have made money with the money you would have invested. So now that you are looking into Microsoft, that's a good thing just because you are saving that time. Over the last year, you can see Microsoft has fallen from 300 down to 250s. We're at the high 250s right now, 258. Lowest it's been this year is 242. So we're not buying too much off of the low, just about $16. So, and that's just at the closing, right? We could see another negative day tomorrow and we could get in at a better price. Who knows? Regardless, guys, Microsoft has been out delivering most of the time. You can see here earnings 227, earnings beat 248, 222, 223. They barely lost this time, 2.7% versus expectations, and negative 1% versus expectations when it comes to sales. Regardless, during that time, they paid a 62-cent quarterly dividend. And they are looking to raise that. You can see 62 cents for the last year, go back 56. So they raised it this last year. They're going to raise it next time. The next dividend payment around October or November will be bigger than 62 cents, which will raise that dividend yield. Although not by much, 62 cents a quarter for a stock that's $300 or so, not very much. Anyways, guys, Microsoft, one of the top companies in the United States, not going away anytime soon. So buying it at a significant discount, which we could actually see here exactly how much. Down 26%. You're buying one of the best top companies, highest quality, and a 26% discount. Not bad at all. So next, we're going to be looking at our next stock, which is Google. So Google's under 110, and you can see this line that I drew a while back saying that under 110 is a good price to get in, just because you can see every time it's been under 110, it's bounced right back, and you can see it's about to do it again. So Google is same boat as Microsoft. Let me X this out, where they have been outperforming, but lately they've been underperforming, this time by 4%, and this last time by 4% as well. We're supposed to make 126, they made 121. Same quarter last year, they made 136. So times are kind of tough for Google, but that is why you're buying it at a discount. We're getting it from 151 to under 110, down 28%, so more than Microsoft. And this company does not pay a dividend. However, they did have a recent stock split, so that would be $1,000 price. $2,000 price is now actually, yeah, it was a 20-for-1 split, so it would have been $2,200. Right now it's only 110, so that you could buy more shares for the same value, if that makes sense. It's the same company, same market cap, just more shares at a cheaper price. That's how stock splits work. So Google is up from $51 from the very depths of COVID, so doubled since then. But we are down 20% from the highs. So you're buying it at a pretty nice discount for a company this size with the growth that it has seen over the last couple of years. And lastly, guys, is our risky pick for the day, NVIDIA. Risky because it's dropped so much recently. We could see here from the very peak of 346 down to the price today of what it closed at, down 60% within a year's time, compared to, you know, Microsoft 25 and Google 28. So that is by no means a good thing when a stock falls 60%. That definitely means that times are tough, and you can see exactly why here. So we're going to look at this quarter. You can see 51 cents it made in the entire quarter of ending July 2022, right? So we're going to go back 4 or 5 quarters. So 1, 2, 3, 4, and this is the exact same quarter last year, ending July 2021. They made $1.04. So they made double what they made this quarter a year ago. So their earnings were cut in half, basically. Why is that? Gaming, I'd say that segment has been cut just because Bitcoin and cryptocurrencies are not as in demand as well as Bitcoin mining as it once was, which simply means people aren't buying the new GPUs that Nvidia is putting out. They used to be selling for over retail, and now they are not, right? They're selling for normal retail price, right? They used to be reselling market for Nvidia products. That's no longer the case. So what this means is demand is cut, which also means the stock price is cut, which for you can give you an opportunity to scoop up shares at a discount, hold on for a couple months, years, see where if it turns at all. Hopefully it does in your favor, but you know, hopefully the market shifts and the GPUs that Nvidia produces are back in demand. Who knows? It's kind of scary right now. That is why it is my risky pick for the day. Let me know what you think of these picks. I do think they are kind of obvious buys. You put in some money, don't look at it for a couple months, I think you'll make out great. So that's my opinion, guys. Thanks for watching, and until next time.